US Treasury yield curves are moving towards or above 5%, raising the risk something may break. This is very confusing for some people, I know, and you could see it for yourself when we are getting these high rates of returns. Yes, that poses a problem. It poses it simply because a lot of these banks, as they mentioned in this article, like SVB, they had really run into a problem. You see, they are long duration, and that means, they're trying to get into, they got to have a return for their customers, okay? If you're a customer with SVB, or maybe it's JP Morgan Chase or TD or whatever it is, you have to get some sort of return. Now, if they want to keep you as a customer, they're going to have to give you higher rates. How do they get that? Well, they have to invest in something that is giving them a higher return. And so they can certainly loan that out to you as a customer. They can figure these different things. But what have we noticed over the past few years, or the past year at least, is that deposits are flowing out of these banks. And so they're panicking, trying to offer higher rates. At the same time, they were investing in things that were not yielding very good for a long time. Like, you were getting these 30-year bonds and 10-year bonds and all of these things that the banks would consider safe. They had very little yield. They had very little return. So they're holding on to that. So now that the rates have climbed up considerably, they're losing. They've lost on that investment. And so how are they going to go and sell that investment without taking a big loss? Of course they can't. And they realize this. That's why you had SVB. That's why you got all these problems.